Good morning. Welcome to Market Mashup, our weekly recap of financial markets and what we have in store for this upcoming week that might impact your stock and bond portfolios. I'm Scott Naska, president of Generation Capital Management. A down market last week as we had the Dow Jones decline by 0.8%. The S&P 500 was down 1.3%, and the NASDAQ was down 1.9%. So, broke the trend of a few weeks where we had some positive momentum in stocks, and what we see is just a little risk off towards the end of summertime, which always tends to be a little slower, and we've rounded back up through Labor Day. So let's pay attention to see if markets change in tone or tenor from what's happened over the first 8+ months of 2023. Looking at the bond side, we have our 2-year at 4.98%, the 10-year at 4.28%. So we have a 70 basis point inversion still that's taking place where the short end of the market is higher than the longer end. Once again, as we've been talking about, this has been going on for quite some time now, and it usually does lead to economic slowdowns or recessions in many time frames. Even pointing out just the shorter end of the market, which is, let's say, under 6 months, is over 5.25% or higher. So you're going to get even higher returns the shorter the maturities are right now, as the Fed controls the short end of the yield curve with their interest rate policy. So even though we're seeing an inversion, it is still quite steeper if you're measuring 3 months versus 10 years instead of the 2-year, 10-year range. A couple other data points I wanted to illustrate here. Oil is at $87 a barrel and gold is at $19.50 an ounce. So keep an eye out on those right now. You've seen a big move in oil over the third quarter so far. Prices have gone higher. We're seeing gasoline higher as well. And you want to keep an eye out on gold just to see if there's any upticks in that market. It tends to be a hedge against inflation or uncertain times. So it's just a target or a measure that we want to point out from time to time. We do have a lot of data points coming out this week. We have the August CPI inflation data out on Wednesday. We have August PPI inflation data points on Thursday. Retail sales is on Thursday, and consumer sentiment is on Friday. We have a fair amount of data points before the Fed meets next week on the inflation front. So could have a meaningful impact on markets this week, as this is really the last set of data points the Fed's going to be looking at before they decide their interest rate policies for September. So higher inflation, that continues to be a nagging indicator that might force the Fed to still remain vigilant in terms of their rate hikes. The market right now is pricing in no rate hike for September, but you want to see if there's any change in that based off of the Fed policies that come out next week, the question and answers that come out, see if there's going to be any movements for the end of the year. We also have Apple's iPhone release event that's coming out tomorrow on Tuesday this week, so you want to pay attention to that just to see the buzz about Apple. The iPhone is the most popular telephone and ecosystem out there right now, so any updates can spur additional demand, which will have a positive impact on the tech sector. So pay attention to that. If you have any questions, feel free to reach out to us, www.gencapmgmt.com. Our team is ready to answer any questions that you might have, give your portfolio a second opinion or a second look, make sure that your allocations are lined up with your risk tolerances and goals and objectives. We have a lot of good things on our website, especially in financial planning. We've got John's top tips out there that might spur some interest in terms of any financial planning needs that you might need to go through at this point in time. But our team is ready to answer any questions you might have. Once again, my name is Scott Naska, president of Generation Capital Management, and this is Market Mashup. Have a great week, everyone.